what are some things that you would say are things they want to avoid during that game plan season where you're like, okay, we're going to get you ready to buy a house in 6 months, 9 months. Here's some things you want to avoid. What would you say to them?
Yeah, I would avoid obviously adding on debt,
Oh
massive
yeah.
one. If you want to purchase a mortgage or purchase a home through a mortgage loan,
Yeah.
don't buy a car.
Okay. Yeah, that's true.
Don't buy a car, anything like that. If anything, look to pay down balances, stack your savings up, even if you're banking on the down payment assistance.
Hmm.
Still, just have some money in the bank because
Yeah,
being a homeowner entails other things beyond paying your mortgage.
that's right. So we're on the Empowering Homeownership podcast, and we have our guest today, Cesar Miranda. Right? I looked at your funny little story. I looked at your last name, and I thought, I don't know if you know this about me, but I used to be a military police, and so I think about Miranda rights that have to be read to everybody when I saw your last name. Silly little story, but that's what came to me when I saw your last name. So, Cesar Miranda from CrossCountry Mortgage, and a great lender that we've used for really the past couple years, and. So we're really excited to have Cesar on the podcast today. We're going to kind of dive into a little bit about what Cesar's doing to help families with their home ownership journey, their financing of the largest investment of their life, right? And some of the programs that Cesar's using. And so Cesar, man, just tell us a little bit about yourself, and then maybe tell us a little bit about the kind of typical borrowers that you come across.
Yeah, man. So thanks for having me,
Yeah.
Michael. Great to be here. So for me, my lending background actually starts right when I was 18.
Oh wow.
So I got a part-time job at a bank. Really quickly got into banking, which led to lending. So I'm about to be 30 now. So basically 10 years, all I really know, man, is
Wow.
loans, credit, numbers. As a loan officer, this is going to be my second full year as of January of
Okay.
this year. So I'm working on my third year, right? And I mean, man, it's just right up my alley. I enjoy what I do, just helping
That's so
people with the
amazing.
largest, like you said, transaction of their really in their lifetime.
Yeah.
I don't take it for granted. So, and then regarding what was that second question?
The second question is like, you've been in lending now for quite some time. What are some of the borrowers, the typical demographic of borrowers that you work with nowadays?
Yeah, oh for sure. So first time buyers, man. First
Oh,
time
really?
buyers, yeah, it's a big one for us. It's probably I would say 9 of my 10 transactions are going to be first time buyers. So again,
Wow.
really, really, really important for me to take my job really seriously because I had a first time I purchased my home. It wasn't the
Yeah.
greatest experience, which got me into lending
Okay.
specifically, just because I know how big of a purchase this is and how much this means to some people.
Yeah.
So being able to educate the clients and offer them really the right programs that are going to fit their financial situation is huge for me.
Wow. I love that, man. And so the first time home buyers, do you typically work with first time home buyers just like in the state of Arizona, or because that's where you and I are at right now, right?
Hmm.
Or do you find yourself lending outside of Arizona as well?
No, so I've done all across the country. So
Wow.
I would say right now it's mainly Arizona for sure.
Yeah.
So, but I have done multiple states, East, North Carolina, South Carolina, Illinois, Washington, all across the country for sure.
Wow, that's
Yeah.
awesome, man. So when you run into, I mean, first-time home buyers, you said 9 out of 10 normally is
I would
what you're
say
dealing with?
so, yeah.
Wow. So 9 out of 10 first-time home buyers, those can be tricky borrowers, right? Because a lot of them could be a little bit skittish, like it's their
Hmm.
first time ever buying a home, right? And it's a massive investment, massive transaction. What do you see that typically like stops buyers from buying right now?
The main one right now is just going to be um, probably going to know my answer is going to be affordability,
Oh,
right? So
affordability.
it's affordability. That's just kind of on the surface
Mm-hmm.
until they speak to someone. Obviously, right now everyone's really priced out,
Yeah,
but you don't really know until you speak to somebody,
exactly.
right? So that's kind of the main thing, just because of the news, the headlines, somebody's uncle tells them something.
Yeah.
But I would always advise, speak to somebody, get the
Wow.
actual information.
You're absolutely right. I mean, I did lending for 18 years, and I couldn't agree with you more, man. Like you can't talk to Uncle Bob that lives on the couch with his mom, right?
Hmm.
Like you have to, and you certainly can't follow the news, right?
Yeah.
Like that's ludicrous. But talking to somebody, an experienced loan officer who can really kind of break down budgeting and their
Hmm.
budget, their afford what can they
Yeah.
afford? Because affordability like that that is it's a relative term, right? What's affordable to you might not be affordable to me, and vice versa. So you really got to sit down. I having worked with you now for almost a year at CrossCountry. I love how you are essentially like a mortgage practitioner. Like you have to take a file and just really break it down and say, okay, Mr. Client, Mr. and Mrs. Client, here's what we can do for you, or here's where you're at, right? As you're doing that, what are some things that what are some things that you typically see buyers underestimate?
That's a great question, man. So I would say buyers underestimate the amount of programs that are out there to help you get into a home. Right?
Wow.
Kind of like to that first question, affordability is a big um, like
Topic,
barrier to
barrier,
entry,
yeah.
right? But once you get speaking to somebody like myself or anybody else that's really out there, whose goal is to educate the client, they don't really understand how many programs are built, like the Hopper program or many other programs that are built to get you into a home
Yeah.
with a lower barrier to entry. And what I mean by that is, the typical 20% down,
Mm-hmm.
theory or whatever
Yeah.
misconception. That's not realistic
No.
anymore. I mean, I would say, again, 10 out of 10 of my clients don't do 20% down.
Wow. So
Right.
100% of your clients are not doing 20% down, which makes total sense.
Yeah.
That was actually going to be, another thought in my head that came across as you were talking was, what are some of those misconceptions? Because you said folks they underestimate the idea that there's a lot of programs out there that can actually help them.
Yeah.
And what are some of the misconceptions when they dive in and they're like, when they actually talk to you, what are some of the misconceptions you typically hear from them?
Yeah, I would say that they just didn't, that first one, like, oh, I don't have $20,000 saved, or I don't have 20% down,
Right.
or I don't have, anything. How am I going to buy a home? Well, I do it every single day.
Yep.
Right. That's the first thing. I mean, it really is depending on the individual circumstance, right?
Right.
There is, as a loan officer, our jobs and how I interpret it is to help you find the right loan program.
I love it.
Right. So my job is to get to understand the client and then share with the client based on your financial situation. These are the programs that I can help you to get into a home, and if maybe they're not the right ones right now, let's see what we can do to get you there. Right. So just some misconceptions is really just listening to the media, listening to somebody's uncle, right, and not getting the information firsthand from someone who is a professional at it.
That's right. No, I love that, man. And so it actually takes a conversation with you as a mortgage loan officer, right? Like this isn't a submit an online inquiry and then you get your answer, it spits it out, right? It's like, no, you got to talk to Cesar and be like, let's Cesar break things down for you, right? I love that, man. And you obviously have access to a ton of programs being with a large retail lender. What are some things that, like, loan programs that you see you typically tend to use the most in situations when you're dealing with first-time home buyers? What are some of the loan products that you use?
Yeah, so you're going to have a ton of different down payment assistance products, right? So I kind of break them down into your traditional down payment assistance, which is like a bond program.
Okay.
That's going to come from like a government entity of some sort or just some organization giving you the money.
Yeah.
Or maybe like a Hopper, which is a little bit more of a creative program, which I'm sure we can dive into here in a little bit.
Yeah.
So typically, again, first-time buyers is what I help out, and then I'm using a lot of different down payment assistance programs on a daily basis. A lot of those being under the FHA umbrella.
Oh, wow. Okay, so
Yeah.
FHA is typically where you kind of tend to fall into because all of those programs are essentially kind of FHA eligible, if you will.
Exactly.
Nice.
Yeah.
Okay. So when we talk about FHA, who would you think what type of borrower is best for FHA? Does it have to be first-time home buyers or?
No, that's actually another misconception. So FHA is not a first-time homebuyer program. Obviously, it's one of the best ones, if not the best first-time homebuyer program. But you can be a second buyer, third buyer, whatever that may be, and purchase with the FHA.
Okay.
I would say the best person for an FHA program would be someone who just doesn't have that 20% down, which I would say 9 out of 10 people nowadays don't, right? So if you're looking for a lower barrier to entry, if you're looking for more attractive interest rates and just more flexibility when it comes to the approval process and all that stuff, the FHA is going to be a great one for you.
That's awesome. So second-time buyers can take advantage of FHA financing, third time. And really, again, to your point, a lot of folks don't understand that they can actually qualify for these types of programs. And FHA is it's a lower down payment requirement, right? What's the minimum down payment on FHA?
Minimum is 3.5% down.
3.5% down. Okay, a little bit more manageable than 20.
Absolutely. Yeah, big time, right?
That's right. So you mentioned, some bond programs that you have, which are typically government entity programs. Do those typically tend to, like, tell us a little bit about, like, do you run into situations where clients are like, does that give me a second lien? Does that impact my interest rate? Are there other qualifications that you tend to have to hit when you work through those bond programs and government programs?
Yeah, so I would say all of the above,
Oh, wow.
right? So nothing in this world is really free. There's always a catch, right?
Yeah.
So we're not using these bond programs or government programs and we're getting free money. We're getting this money lent to us, right?
Okay.
And they attach some strings to it, right? Which is there's going to be a second lien on your title of your home.
Got
So if you ever sell in a certain time frame,
You have to
that
pay it
lien
back.
has to be paid back,
Got
right?
it.
And then oftentimes there will be a higher than market rate, right? So
Okay.
those are the two catches there typically. And like I said, or like you said, more or less a mortgage practitioner. So I'm going to let you know what solutions you have, and I'm just going to let you see apples to apples. This is how this program works. These are the numbers. This is how this program works. These are the numbers, and the numbers explain kind of themselves.
Exactly. No, I love that, man. Like, when I was doing lending, that was one thing that I really gravitated towards, was giving clients options. Like, here's option A and here's option B, and then having them choose, right? Which one's better for you and your family? Because it's ultimately what it comes down to. Like, there's great programs out there, but when you put them side by side and they look at them and they're like, oh, wow. And then for me, it was always, which one's better for you and your family? Because I know it wasn't just an individual person decision, right? Like, this is a big, if you're married or you have children, like, and you're about to purchase this home, like, this is a big, like, you really got to consider the big family picture, right?
Yeah.
And so we talked a little bit about bond programs, the government stuff that maybe puts a second lien, right? Maybe gives you a higher interest rate. There's another program that you use pretty consistently, and that's called the HOPER program, right? HOPER is it's a socially innovative research project, right? And I don't know if you know the acronym, but it stands for Homeownership, Promotion, Education, and Research. And so, unlike the bond programs and the government programs and whatnot, it's a research project. So I love what you said, that FHA allows second, third time buyers to get into their financing, right? Well, same thing with HOPER. And so, question for you on how you've been able to incorporate HOPER and FHA into your day-to-day conversations. How has that gone for you?
Yeah, so I always just take the approach of education is big for me. And I say this from the beginning. My job is to educate you on what's available to you specifically, right? So if the bond program is available to you, I will show you that. If the HOPER program is available to you, I will show you that. And again, I just show you, I didn't explain to you as well, how do these work?
Yeah.
What's the catch? Because everything has a catch, right? And then at the end of the day, the numbers are the numbers. And I say, you don't have to pick right now. Talk about it. But as you see, there's one that's going to be maybe a better long-term program for you, and not just a short-term solution, while also having maybe more attractive numbers up front as well.
Wow. Talk a little bit about, like, when you see these two programs side by side. Maybe you have a DPA program, or maybe you have a bond program up against, let's say, HOPER. Based on your experience, how can you see FHA and HOPER improving that hot topic of affordability? How does FHA and HOPER improve affordability?
Yeah, so actually I would say the HOPER program allows us to use a market rate.
Oh, wow, that's
right?
huge.
So market rate, no lien, right? So regarding affordability, when I compare it side by side to a bond, down payment assistance program, who's typically going to be a little bit elevated above the market rate, we're going to save $100, $200, maybe $300, depends on the loan amount, on a monthly basis, comparing to that initial down payment assistance
just because
program.
of the interest rate.
Just because of the interest rate, right?
Wow.
The cherry on top is you're going to see some savings elsewhere, right? With your electricity bill, stuff like that.
Wow. Yeah, that's huge. And I mean, you talk about electricity because HOPER has an element of solar, right? So when you're talking with clients and maybe even your real estate partners and you say the word solar, like, how do you help them understand that this is different solar than like what they're traditionally used to? And we're talking about affordability, so speak on that.
Yeah, so it's huge. It's a big conversation, obviously, right? So solar's conception, or how would you say, popularity, it varies per maybe per person.
Per region.
Yeah, exactly, right? Some people have bad experiences and stuff like that. So obviously I have that conversation pretty much every single day.
Yeah.
And the simple fact is that this Hoper program, we're not here, or you guys are not here to put panels on somebody's roof. You guys are here to help people get into homes, right?
Yeah.
So how the program is structured allows for a lot more approvals and a lot more people to get into homes, right? The catch is you add panels, but they're going to be fully owned panels that you're not going to have a second payment on. Right.
Oh, that's huge.
You're only going to reap the benefit of them, right? So for someone who maybe like myself has their own solar system that they're paying.
Oh, wow.
I don't have as much of a benefit from my solar system because I overpaid.
Oh, man, that's a bummer.
So not only is Hoper being under the FHA umbrella, the prices on these systems are going to be mediated, right? They're going to be controlled, right? You're still going to reap the benefits of the electricity and just how it's structured. Again, you're going to see a better monthly payment when it compares to other down payment assistance programs. So at the end of the day, and I'm sorry I'm going long-winded, at the end of the day, if you're looking to get into a home with minimal out-of-pocket and you really just want the best monthly payment possible, the Hoper program is going to be able to achieve that, I would say, a lot more often than not compared to some bond programs. Just when you look at the monthly payment. And then on top of that, you just get, like I said, the electricity savings as well.
That's right, man. Wow. And there's no second liens that they have to worry about. So like you're comparing that to some other program and you're like, hey, you get into this program here, program A, and in 3 years you decide to sell, 5 years you decide to sell, you probably have to pay that money back. Whereas Hoper, you don't have those restrictions.
Yeah. So I earlier mentioned some of these programs have a better long-term benefit, which is the Hoper program, because the bond programs, you can't do what's called an FHA streamline refinance.
Oh, wow.
Which means that you have to do a full refinance. You have to fully qualify. With the Hoper program, you're able to do a streamline refinance, which does not require you to qualify again. So it's a simple phone call to me. Hey, I'm ready to go. I made my payments on time for the last 6 months. Let me lower my interest rate. I got you with the Hoper program. With the bond programs, we have to have a deeper conversation. We have to have full documentation. So it just makes that next refinance a lot more easier for a lot of people.
That's huge because, I mean, refinancing can be a way even down the road to adjust your, better your financial position, right? Whether that's, lowering your mortgage interest rate can, to your point, can drop it another $100 to $300 a month in some situations, right? That's huge, man. What do you think, how has that program helped you actually secure more closed loans?
Yeah, so one of the big things with the bond programs is that they do have some credit requirements that are above that of the FHA. The FHA, you can start getting into it, 550, 580, depends on your down payment, right? But the bond programs, their bond DPA programs oftentimes need a 620, a 640, right? The Hoper program goes back to the FHA guidelines, which we can do 580.
Wow.
Right? So that opens up a lot of more opportunity for a lot of clients. And then just with that alone, that's an extra 2, 3, 4 more families on a monthly basis that we can help out. Yeah.
That is amazing, man. How, with the clients that you've been helping, what have you noticed when you do get them into the Hoper program? What does their cash to close situation look like? Is it like, do they have to bring a bunch of cash, or is it typically covered by the program? What are you seeing there? Seller concessions?
Yeah, so the Hoper program is like a down payment assistance or a down payment assistance program that will cover that down payment, and then it doesn't have the bond fees and stuff like that the other programs will have. Right. So which I call kind of junk fees, unfortunately.
Okay.
Great program. They still help people out. Not bashing those, but the Hoper doesn't have those extra junk fees, right? And you're still covering your down payment. So down payment at that point, or cash to close at that point, may be 0, 500, 1,000.
Oh, that's super minimal, right? And you would think that if you're buying a home, you should at least be able to come up with $500 to $1,000, right? You got typically appraisal fees and little things like that you have to consider, right? So that's awesome, man. What would you say are some things that you look for when you're having that conversation with those clients and you're having that initial interview kind of application process and you're hearing their story? What are some things you look for to figure out, okay, I think I'm going to take you down this path versus this path?
If I'm honest, I don't really gauge based off the conversation.
Oh,
I will get a background with the conversation, but
okay.
then based off their actual financial position with their income and their credit, that's going to tell a bigger story, right? Because,
Yeah.
again, the barrier to entry with the bond programs is going to be higher with that credit rating, right? And just
Yeah.
right now, with everything going on just in general in the economy,
Mm-hmm.
scores are a little bit lower, if I'm honest with you, right?
Yeah.
So at that point in time, the Hopper program doesn't disqualify as many clients.
That's awesome.
You
And that's
know?
what's helping you capture more deals per
Exactly.
month. And we say capture more deals. We're not trying to say that it's just about just, making a living for yourself, right? But you're ultimately helping more families every
Yeah.
single month because of it, and
Yeah.
that's huge.
Yeah.
What I think about the clients that they, to your point about it's a little bit deeper than just having a conversation, right? Because how many people call you and they're like, well, I have this credit score, I have this amount of income, what would be my interest rate? Like that's their sole focus, and it's like, guys, it's way deeper than that.
Yeah.
Like you could have nearly every single check boxed as this person next to you,
Yeah.
but there's one box different, and the interest rate and the fees are going to be completely different for each of those families, right?
Yeah.
So speak a little bit on that. Like what kind of what wide range of clients do you see that hit like higher rates, lower rates, and what really impacts them?
Rates are very dependent on the program itself.
Oh wow.
Right.
Okay.
I would say actually heavily dependent on the program. I would say program first and then credit rating, right? So, again, the FHA in itself is a lower interest rate program when you compare it to like a conventional program and whatnot. And then on top of that, you can have, and I say this to a lot of clients, you can have a 620 and go FHA, Hoper maybe, and have a better rate
Wow.
than going with a 750 conventional with 20% down. That's just the realistic thing about the FHA.
That's crazy.
Right. So again, it really is dependent. You could have a 620, a 600,
Yeah.
use the Hoper to get your down payment covered and have a better rate than someone who brought in $100,000.
So even those buyers that come to you and they say, "Hey, I've got a bunch of money. I think I want to go conventional." You'll actually still look at, as a mortgage practitioner, right? You're like, well, you can keep a lot of your money and still get a really good rate and payment. This option, it's totally up to you if you want to put a bunch down, right?
Yeah.
Oh, that's powerful, man.
Yeah.
I love that. What would you say? What if we had some home buyers, listening, and they're like, you know what? I think I want to call Cesar and pick his brain a little bit. But I'm maybe 6 to 12 months out from buying. What kind of advice would you give that person?
Oh, that's perfect time, man. Perfect time.
Perfect.
Get ready.
Let's go.
Preparation, right? Preparation. So you don't know what you don't know, especially
Yeah.
with the biggest purchase of your life, right? So again, you can listen to your uncle, your mom, your dad, but likelihood that they have seen or gone through dozens of transactions on a monthly basis,
Yeah.
probably very unlikely. So always, speak to a professional, whether that be your real estate agent, and have them connect you with your loan officer, or just reach out to a loan officer, and maybe a couple, right?
Yeah.
And we're all very different in how we approach the business, but look for one who's really has your best interests in mind, who's really looking to educate you and understand where you stand.
Wow.
And that gives you a long runway, and ultimately that's going to lead you to success.
Yeah. And different loan officers will have different access to different programs.
Yeah, that's
So
true.
just because you have access to a bunch doesn't mean there might be one or two out there that another loan officer has access to that Cesar doesn't.
Yeah.
So that's interesting. So 6 to 12 months out, you would still encourage them to at least have a conversation with the loan officer?
Absolutely.
Awesome.
Yeah, absolutely.
Would you say go as far as submitting a credit application to kind of see where you stand, or would you hold off on hard inquiry credit pull at that point?
Yeah, so that's a great question. So I would say submit the application with a soft credit pull if the lender allows it. Most lenders allow it, right? I do. That's what I always start with. I always start with a soft pull unless you're telling me you're going to submit an offer tomorrow, right?
Oh, wow.
So at that point in time, there's no harm to the credit. And obviously, we wouldn't want to harm you 12 months out. We just want to educate you. So without that report, I can't let you know where you really stand.
Okay.
Because you can give me word of mouth, but that could be different, right?
Yeah.
So submit the application, soft pull, not going to impact you. Let them know where you stand with your monthly income, and then let them educate you on what's out there.
That's awesome. Yeah, soft credit pulls are really neat because I think of those as like a kind of a little sneak peek without actually going for it. You get a little sneak peek into their debts, their balances on the debts, and their credit scores, right? Is that soft credit? Is that looking at all three credit scores that you can typically find between the three major credit bureaus, Equifax, TransUnion, and Experian? when you do a soft credit, do you look at all three, or is it like one or two of them?
It can be all three. It's
wow.
oftentimes just two, but it can be all three for sure. But yeah, like you said, it's going to allow me to take a sneak peek and understand where your finances really are.
Yeah.
Where that monthly debt is, where that credit rating is, where are the opportunities that you have in the next 6 to 12 months to improve your overall financial situation.
Yeah.
To improve those odds and those numbers in that time frame when you're ready.
That's awesome. So you've got their, you do a soft credit inquiry, you're having a great conversation with them, you have a game plan, and it's like, okay, they are 6 months, 9 months away from making a move. Maybe their lease agreement is coming up due, right? What are some things that you would say are things they want to avoid during that game plan season where you're like, okay, we're going to get you ready to buy a house in 6 months, 9 months. Here's some things you want to avoid. What would you say to them?
Yeah, I would avoid obviously adding on debt, massive one. If you want to purchase a mortgage or purchase a home through a mortgage loan, don't buy a car.
Okay, yeah, that's true.
Don't buy a car, anything like that. If anything, look to pay down balances, stack your savings up. Even if you're banking on the down payment assistance, still just have some money in the bank because being a homeowner entails other things beyond paying your mortgage.
That's right. What I love what you said about stacking some savings, even though if you're thinking of banking on the DPA program, down payment assistance program. So, how important can some reserves or savings be for a client?
Yeah, that could be so important. It could make the difference between a green light or a red light.
Wow.
Right. So, funny to say, but they look at not just your credit and your income. They look at your whole financial picture.
Yeah.
Part of your financial picture is how much savings do you have just sitting there in case of an emergency right? So just having a payment or 2 payments or 3 payments, ideally more, the better, just to put you in a more secure position. But that also shows the lender that this is a good person to lend to.
Yeah.
Right?
Less risk for a lender.
Exactly.
When you've got those reserves, good credit, paid down your debt, all that good stuff. That's awesome. So you obviously have been a Hoper advocate for quite a while. There's loan officers that that we run into, and they're either skeptical or they maybe don't deal with a lot of FHA clients. Like, what advice would you give them when they're first potentially hearing about the Hoper program?
I would say our job as a loan officer is to educate what's out there for the client.
Yeah.
Right. So if we have this program available, we would be doing a disservice on not educating them on what's potentially out there. Right.
I love that.
And again, every program has their pros and cons. No program is perfect by any means, but this can also make a big difference in your monthly count in regards to how many families you can help, and also your business partners and realtors on how many families they can help and how many families you guys can help together, and just how many more families you can get into homes that otherwise, if you're not showing this program.
Wow. That's powerful. I didn't even think about the idea that it actually trickles down to like the agents and them helping families, because you're obviously helping the family that's applied with you, but that agent is involved, right? There's other people in the transaction that benefit from a financial standpoint, yes, but also are providing for their families too, and helping families get into home ownership, right? Yeah. So what would you say are some things that, because to your point, I mean, we run into loan officers that unfortunately they don't educate their clients about all the programs, and so they kind of stay in their lane of, here's what I know. I'm not necessarily interested in bringing on another program that I'm not super familiar with. So what would you what are some things that you would tell loan officers, these are some key points that you should know about Hoper, just so you have that in your tool belt?
Key points that you should know about Hoper, I would say I was once also maybe timid to discuss the program because of how it works and the, like you said, kind of the involvement of solar, right? But as you learn more about the program and as you see how many more families you can help on a monthly basis, that's number one, is that it's going to help a lot more approvals. Yeah. I've seen it firsthand. I'm sure you've seen it as well. And that we're not really doing this for the solar element. We're doing this to get more people into homes.
That's
people
right.
who want to get into homes.
Yeah.
Right? So the opportunity to help more families is always going to be there. The opportunity to not have a higher than market interest rate is going to be there.
Wow.
And when you compare that to other down payment assistance programs, you're going to have a better monthly out-of-pocket expense with the Hopper program and other related programs than you will with a bond, typically maybe 9
yeah.
out of 10 times, right?
Yeah.
Not all the time, but
Yeah.
typically. So
because there's some good bond programs that have great rates, right?
for sure.
Or other DPA programs that don't maybe increase your interest rate. But I love that you at least give them the option. You review it with them, right? And I love that, Cesar.
Yeah.
That's awesome.
Everything comes down to monthly.
Yeah.
Yeah. I mean, if at the end of the day in this market specifically, everyone's kind of tighter, right? So if you can save someone $150 somewhere, maybe 200,
that's huge.
they're going to take that.
I mean, absolutely.
Yeah.
Even $100.
Yeah.
Like, it's crazy to think like we are really in a situation right now with everything just going up. I mean, I just think about like gas. I just filled up my car and I'm like, man,
Yeah.
I have not had to pay $90 to fill up my car in a long time.
Yeah, you're telling me, man. Yeah.
So awesome, man. Cesar, it's been so good to have you here, man. Like, this is awesome that we get to do this. I know you're just about 25 minutes from my office, and I get the pleasure of working with you pretty much on a consistent basis. But if anyone out there is like thinking about like, man, I've got maybe it's a real estate agent that they've got a client that they just want to see some additional options or have a second opinion on their mortgage qualification, and they want to reach you, man. How would they do it?
Yeah, man, thank you. So feel free to reach out to me on social media. I am Cesar Omar, so IAMCESAROMAR, or they can reach me, call me, text me, 623-313-8307. Personal line there, so feel free to call me, text me. I'm here to help. So
awesome, man. Yeah, Cesar's awesome. He always picks up his phone, and clearly we know that he's always looking for the best interest of his clients. So
yeah.
Give him a call. Cesar, good to have you, brother.
Likewise, man. Thank you.